Hi, Rebecca Foote here with the Rebecca Foote Mortgage Team. We are back today with Paige White from Rescore Your Life. And today we are talking about establishing new credit. So maybe you are a young person who is just turning 18 and needs to start establishing credit, or perhaps you've been paying for cash with everything and you need to start establishing credit, or maybe you had fallen on some difficult times and you need to re-establish credit. So, welcome back, Paige White from Rescore Your Life. She's been a great resource for us and educating on us. So, thank you for coming back, Paige.
Absolutely. It is my pleasure. I appreciate you having me. And we always love the opportunity to educate people as much as we can.
Well, you are a wealth of knowledge, and this is another hot topic that we get a lot of questions about. So, talk to us about establishing credit.
Yeah, absolutely. Well, why don't we start off with the topic you just said first with kids, or young, and you've never had credit.
Sure.
And I can use my daughter as an example because when she was young, obviously this is the industry I'm in, so it was really important for me to teach her how to build a strong, healthy credit profile from day one. So right off when she was in college, believe me, they prey on college.
Yes, they do.
There's plenty of opportunities that are specifically college cards. But we got her a credit card, first credit card right away. Didn't have to do secured because, again, when they're young like that, they have college cards specifically. So we got her one little $300 card. We had her build up on that the next year, and that was when she was 18. The next year, we had her get another card. Now she had a little job at that time, so she had some money, so she got a little bit higher of a limit. And then we had her get a credit builder loan. And so by the time she went and got we had leased her car, and then she went to go buy it, and that was when she was 24, and she's a nurse, so she makes good, solid money. She went to go buy it. She was 24, and she had a perfect credit score. I was like,
That's awesome.
so unfair. Your
Oh,
score,
she has you as her mother. So.
but establishing that credit. So that's exactly what young people or people with no credit want to do. They want to start off with some smaller cards. You're not going to go out and get a Chase Southwest card and get points for flying.
Mhm.
It's not going to happen.
Yeah.
You have to start with some smaller limits. Capital One is really we recommend them a lot. They have good customer service. And we usually recommend 2 cards. If you don't want to go get 2 cards the same day, that's fine, especially if you're real young. Start like with my daughter, do 1. You can go get a Capital One Visa and then go get a Capital One MasterCard. Um,
Oh.
and then stay with those. And then after you've had those a few years, then you're going to start getting a lot of better offers, right? Obviously, the more income you make, the better offers you're going to get. So in my daughter's case, being a young college student, it took her a while to build up those limits because she didn't make a lot of money until later. So getting that those credit cards going is important. But the credit builder loan that I was telling you about, most banks have this. Okay. And this is going to, I call it a glorified savings account. So what I mean by that is you'll go apply for this loan and they're going to approve you for a certain dollar amount. So they're going to say, okay, Rebecca, you are approved for $500. And then they're going to say for the next year, you're going to put $40, and these aren't real numbers. These are just
Sure.
you're going to put $40 a month into this account. Well, $35 is going to go to your account and $5 is going to be the fee they make on you, right?
Okay.
They're making money on you. Obviously, this is a benefit. Now, established banks aren't going to be necessarily doing it the same exact way as like if you have poor credit, they're going to make a larger amount on you. And then, but the end of the year, you'll get your $500 back. That's why I call it a glorified savings account. But the beauty of it, Rebecca, is that in the entire year, it's been reporting as an installment line of credit.
Ah.
Okay.
Yep.
So, and you never want to hurry up and pay that off. You want to have that as long as possible. So if you can get a 2-year credit builder loan, that's actually going to be better than a 1-year because you're going to want to have that extended. So now the information I just gave you does play into both new people and college people as well. But let's say you're credit challenged.
Wait, can I ask a question first?
Please.
So, and this might not be a thing anymore. Years ago, I heard you could go on mom and dad's credit card
Mhm.
that's been established for years and all of a sudden take their credit history, and now that's your credit history, and you had this 10-year credit history as an 18-year-old
Sure.
perfect credit. That doesn't exist anymore,
No,
correct?
it still does. You still can be added on as an authorized user. There's no doubt that that still exists and it can help your credit. It is taken into consideration by underwriters and such when they're looking at it. If you're an 18-year-old kid and you have a 20-year credit card, math doesn't work out here.
Yes.
So they do take that in consideration, but it still can help you with your credit scores. We always encourage people to be added on as an authorized user. Um, I will tell you over the last couple of years, and maybe this is kind of what you're alluding to, or maybe not, but I have found that, okay, there's companies out there, Rebecca, that will pay to have added on as an authorized user.
Oh.
So let's say I have a $25,000 credit card and somebody comes to me and says, I will give you $3,000 to add me on as an authorized user to your perfect credit cards. And they're buying that. Well, credit card companies got smart and figured out this is what was going on. So not only would they take the authorized user off, they would close that person's credit card.
Ah.
So now they just lost 25 years of credit history. Not a good idea to do. And so what they kind of became stricter, especially mortgage underwriters. I don't know about other underwriters with cars and credit cards. Mortgage underwriters became more strict. And they said, okay, it has to be a mom, a dad, maybe an uncle or an aunt. It has to be a very close family member, maybe a grandparent, but it cannot be like a friend or whatever. It won't have the same impact.
Gotcha.
So sorry if I went too far off.
No, answer my question. Thank you.
Absolutely. All right. So I think we were going to go into talking about if you had some bumps in the road and have some poor credit. So I always think about credit like a teeter-totter. There's a positive and a negative to the teeter-totter, and you always want your positive side to weigh more than the negative. Well, there's two ways to do that if you're a credit challenged person. One is to get the negative removed, and of course, that's where our company can help you. If you hired us to get the negative removed off of your credit report, we can do that side of the teeter-totter. Well, you got to do the other side of the teeter-totter, and that's establishing credit. Well, if you have poor credit, you're not going to be able to go get a regular credit card. You're going to have to get a secured credit card. So I always say you got to put a little skin in the game.
Yeah.
You have to build your credit worthiness. You have to prove that you are capable of paying your bills, and they have to protect themselves to make sure they're going to get the money back. So a typical credit card that we use, we have like Capital Bank, which is like Open Sky and Merrick, and I can send you a link as well that you can give any of your clients that will that way they'll get approved. But typically you have to put about $200 down. Okay. So the way that works is a lot of people think that means they have a $200 credit. No, that's not what that means. You have $200 security deposit, your protection. So you put $200 down on this credit card. It sits back here in this security deposit, and it's there to protect the company. But you still have to use your card, and you still have to pay your bill for every purchase that you make right away and not think about that $200.
Mm-hmm.
Now, after you've had that card for a year, sometimes 2 years, it depends on your payment history, they'll give you your money back. So don't expect it soon, but you'll get that money back eventually. And then, this is we can do a whole nother video on how to pay your bills, but keeping your balances low at all times is very important. Below 30% is where you should always keep your credit cards. And then never, ever, ever have a late payment. One late payment, Rebecca, can drop your score as much as 100 points overnight.
That's crazy.
That's how impactful it is.
Yeah.
You can't be playing around. Get yourself set up on automatic deduction. When you set yourself on automatic deduction, another important thing to do, Rebecca, is do not use a debit card. Because how many times do you lose your debit card? I don't know. I'm guilty of maybe once a year. So if I set myself up on automatic deduction on my debit card and then I lose it and I forget and my bill doesn't go through, I'm going to have a late. So
Yes.
always set it up on your routing and checking number to protect
Mhm.
yourself in that manner as well. And then as far as bad credit people, then we have a specific credit builder loan. We use Credit Strong. Again, it'll be on that same link I can send you. And then they do have a little upfront fee, but it's not real big. It's like $15 or something. So it's not going to break the bank.
Yeah.
Um, but getting that established. So that's going to be your more bad credit people. And they're going to have that credit for at least 6 months to get qualified from an underwriter because they
Yes.
have to show that history.
Yes.
Yeah. Even if you're added on as an authorized user, you have to prove your ability to pay your bills.
Yeah. Sometimes 12 months, depending on the other credit profile. So,
Absolutely.
yeah.
Absolutely. Or what scores you need to get to, how bad your negative is. There's a lot of factors that are involved, but whenever people come to us and we give them the education from day one on establishing the credit, right, and building that credit profile. But let's say we're 4 months in and they still haven't opened any credit. No matter what, they have to add 6 months. Even if I got 100% removed, add 6 more months because you have to have that credit established.
Yes.
Yeah. So I think that's that. Oh, as far as like how many cards, this is maybe something that you're
Oh, yes.
people might not want to know. So as a brand new person, I recommend just exactly what I said. For bad credit people, 2 credit cards and the credit builder loan, no more than that, because having too much credit is also a risk, and you're looked at poorly by an underwriter as well. For people that are brand new, like a college student, I recommend the 1 credit card to start and the credit builder loan, and then a second credit card down the road. Now, if you want to get into the lovely 800s, which is not, and you know this, and I'm sure you advise people of this. It's very, very, very hard to get to the 800s. And once you get to like a 740, 760, there's really nothing.
There's no difference in pricing.
Right.
Yep.
So don't get stressed out about that 800 number, but 3 to 5 credit cards and 1 to 3 installment lines of credit is really where you want to be. So hopefully
You hear that? That's great information. So thank you.
Yeah, absolutely. It's and like we said before, having not just good credit, but having established credit is the key to financial freedom. And and I think we were kind of talking about this early with Dave Ramsey, right? How is that?
Yeah.
How is that financial freedom? I have debt. What? That's not financial freedom. Okay, financial freedom means that you don't have the burden of debt. It doesn't mean you can't have credit cards. A lot of people come to us, well, you know what? I don't want to get a credit card. I'm not going to do it. No, it's not going to happen. Well, why? Why don't you want a credit card? Well, Dave Ramsey tells me not to get it. Okay.
Yeah, we hear it too.
And here's what I have to say to that. The day that you have Dave Ramsey's money, you should do everything he says. But until you have enough money to purchase a home or a car with cash, you have to have credit.
Yeah.
And so it's just crucial information. And also a lot of people don't want credit cards because of the high interest rate. Well, I have amazing credit now. I used to be a client. I used to have really bad credit, but now I have amazing credit and I still have like a 28% interest on my Southwest card. It doesn't matter if your interest rate is 1,000,000%. Pay it off every month. Then you don't have to pay the interest. But it's a game, and you have to learn how to kind of navigate through the system.
Exactly. I agree 100%.
Mm-hmm.
So, well, Paige, that was a lot of useful tips, and I know our clients and our agents are going to eat that up. So thank you so much for joining us again today and giving us a lot of useful tips on establishing credit. And if anybody has any questions, please feel free to reach out to Paige at Rescore. Her contact information is scrolling across the bottom of the screen there. And I can tell you, us at the Rebecca Foote Mortgage Team, we highly recommend Rescore. We send our clients over to them to help them improve their scores. And I recently found out they help with student loan consolidation. So definitely going to be sending clients over for that as well.
Thank you
So
so much. I really
yeah,
appreciate it.
yeah. So thanks for joining us today, Paige, and we will have you back for another hot topic.
See you later, everyone.